Hey, this is Jeff Scott. This is my weekend review for October 18th, 2015. This will hopefully be an abbreviated one as I'm passing through an airport right now. Once again, I termed this weekend as resistance turned to support. As always, it's for education purposes only. Anything I recommend is in the spirit of education advice. I'm a doctor, not a broker. I'm not affiliated with any software vendor or trading company, and trading involves risks. Not going to spend much time here, but as I like to say, schooled in canceling and really taught how to trade by John Person with some help from Elder, volume price analysis, and Van Tharp and position sizing. I have a lot of tools, and I heavily rely upon TradeStation and Thinkorswim, and also HGSI and EdgeRater. I had the opportunity this weekend presenting this EdgeRater story and HGSI in Orange County with Chris White and George Lea, among others, with a guest appearance by David McMullen, who's truly a great trader, and we wish him his best. HGSI had a significant upgrade this week, adding a $3,000 package for no more additional money, adding the functions of volume price analysis. Friday sector review, there's a lot of green. What wasn't working, industrials, retail, transportation were particularly weak. Utilities were mixed. The major markets tell a story as we've now pretty much across the board. This is VIX and dollar in the lower right, so they're different. Pretty much have broken above the 50-day moving averages throughout, and that's a big deal. And hopefully those 50-day moving averages will turn into support where they were previously resistance. In Genesis, you could see, most want to point out that across the board, the advanced decline line and on-balance volume have turned up, which is also very bullish for the market and suggests that perhaps we have seen, at least for now, a bottom put in for this correction. Interest rates are still weak, and they're probably indicative of the weakness in the economy and concern about the economy. And remember, falling rates are good for REITs, MLPs, utilities, dividend payers, and home builders. AD lines have started to turn up both weekly and daily, which is also a good thing if you are bullish on this market. And the number of stocks trading above the 200-day moving average has rebounded, and look at how they've skyrocketed quickly above the 40-day moving average. Again, sign of a turnaround. The canaries in the coal mine I would put best at neutral, as they are squeezing on the 50, poised to break out. The question being whether they break out up or break down. Market thoughts: short-term positive week in the markets. OBV and AD are leading the markets higher. Market participation improves. Growth lags material. Strength was seen especially in defensive stocks. And feeling short-term overbought. Long-term, I've been saying for 2 months that this feels like 2011. It still does. I can't tell you if this is the end of the correction and the beginning of a new bull, or is it still part of a topping process? Time will tell. We have the U.S. Fed on the hot seat with full employment here and slowing worldwide economy. Although I could comment about my kids and getting jobs. It doesn't seem like full employment. Risk management is prudent. We've entered the month where major bottoms often occur, and do the last 2 weeks signal that the correction is over and we move to a new higher? Time will tell. Stock patterns are cyclical, and you have to adjust your game plan based upon where we are. It feels like we're coming down here and perhaps have started to turn the corner, and perhaps as we go into November, it will be time to go big into the market. I still believe at this point caution is warranted until we take out the 200-day moving averages and retest them. Based upon where I think I'm in the market, I am adjust my attack as well as position sizes. I am still living in a conservative mode of raising cash with smaller positions, sold some premium, although I did start to get longer as last week went on. Know your news and EPS dates. Here is a list of news. There's the usual suspects, but it seems a relatively quiet week. However, Starting off with Halliburton this morning, Morgan Stanley, and Valiant. This is a very busy week for earnings, as you could see here, and something to be aware of. Charts of the week. These are for educational purposes only and not investment advice. Trading, especially options, carries substantial risk. I do not warrant any expectation of return. I often take these trades if they execute, and I'm doing this not to provide stock tips, but to openly discuss how I take the trade, why I chose a specific stock or option strategy, and where I would plan on taking profits or placing stops. As you can see, last week we chose Allegiant. I called it my get on a plane setup as price was right below the PSAR dot. Mobile breakout from a squeeze, big kahuna, and a nice base in a long-term uptrend. I liked it. Also had a high close doji on the daily, as well as PPS daily and weekly buy signals. OBV on the weekly is strong. On the daily was about to cross its moving average, and the PSAR I felt was close to flipping. Ignore target 2. I think it's 249, not 233. Here were my parameters. You can see a green line is my stop. The white line is where my buy would be if I took out that high. The red line would be my stop. As you can see, we broke out above my buy line on Monday, but had a breakout failure, at which time I closed the position and took and at a break even with a breakout failure. It's important to note that over the last 4 weeks, 5 weeks, setups that routinely work in strong markets have all moved up initially, but have all given back some of that initial gain very quickly. And I think indicative of this market are these breakout failures. We can cross off the October 16th to 18th meeting. I'm on my way home for that right now. This coming weekend in PV, I wish I could be there, especially since Ron and Ian will be hosting a great show, and also since the new VPA stuff will be discussed. And next weekend I'll be in Palm Beach Gardens speaking with John Person. As usual, we'll go through top-down abbreviated review, as well as look at this week's chart of the week. So, sneak that down there. Looking at last week from a performance perspective, black, I'm going to scale down the various groups that I look, and then I'll comment on them. You could see it's about 50-50 black and red, so a mixed week on the growth groups that I look at. The S&P 500 was up 0.9, the IBD 50 was up 0.92, and the HGS 100 was down 0.66. So growth underperforming the S&P. The buy watch list that I gave was about 50-50, but up 0.7. And had I left my portfolio intact, which I wouldn't say that I did, I do a lot of trading during the week, I would have been up 0.58 if I went to Mars and didn't trade for the week. From rotation, from a Hindi, no surprise, there were no Hindis. You would not expect any Hindis, as both the new highs and new lows were less than 2%. Bucketology showed that we're firmly in bull territory, with 80% of the stocks in the S&P 1500 above the midline of the S&P, are the Bollinger Bands rather. Very few stocks above the upper Bollinger Band. Ian's Woody indicator clearly is in a buy mode here, green, after a series of big kahunas near month's end after the last burst to the downside on September 28th. And then I just wanted to show you some seasonality here to notice that we are starting to get to a period of time where over the next 1 month and 2 months, we have a lot of stocks here that have strong seasonality. And some of my favorites might be Alaska Air, up 18 out of 20 years. Commerce Bank shares up 5%. Over on this side, I took the best of the best and can show you some of the big winners here. And as you know, I'm a big fan of seasonality. And one of the nice things about a program called Best Choice is I could come up with some of the best seasonality trades in the month of October. And these are all bullish trades, by the way. There are not a lot of bear ETFs that show up here. Down here, on the other hand, with the Best Choice bears, some of the worst trades, or the best trades to the short side, would be FAZ and TZA as two stocks that are contra ETFs. And if they do well, then that says, let me say this again. If FAZ is a great performer and TZA are a great performer on the short side, because these are shorts, these are bear picks, then that has a lot positive to say about the stock market. So we're going into a seasonably strong period. Opening up HGSI. Actually, call up TradeStation. This will take a few minutes to load, and we'll look at HGSI first. Okay. Let's start by going to the Major Markets Plus and HGSI. Top-down view, so all price and volume heavy weighting towards this Friday and then last week. And you could see the leaders were the Dow and the NYSE, the NASDAQ. The laggards were volatility, transports, the Russell 2000, and the dollar. So as I said, growth, which would probably be seen in the smaller stocks, underperformed some of the bigger stock action. That said, if I just rank it by 5-day performance, you can see that the big loser was the VIX, down 12%, gas and oil weak, commodities, and as I mentioned, the transports. Let's take a look at some of our favorites real quick. See how we're doing here. Not yet. Look at the S&P 500 to start. So what we see, let's go to just the plain old moving average view. Close. All right. We see that we've broken above the 50. 50 is still in a downtrend, unfortunately. And as I said live, my guess is we trade up to that 200-day moving average, and we may have to bounce around it before we break through. This 200-day moving average was support on the way up. It's likely to be resistance. On the other hand, I am pretty excited that we have broken above the 50, and one would hope that this becomes support. So one thing I talked about last night when I did this live was, have we gone from a trading range down here, and are we now in a trading range perhaps up here? And time will tell, but it certainly looks a lot better than it did 2 weeks ago. Continuing in the list, Dow Jones Industrial looks very similar, and you can see I drew out these new trading ranges last night. The NASDAQ also looks like it has a retest here is above the 50, and is sort of in this area now between the 50 and the 200, and breaking above the 200 will be the next big move. You can see how the NASDAQ traded just up to the 200 back here, or to the 50 up here and failed, so breaking above was a big deal. Still got to break above the 200. Russell 2000, the weaker of the bunch, also did trade above the 50 and close above it, but it's in the most precarious position. Dropping down and looking at the dollar, you can see why gold was strong as dollar broke down below all of its moving averages and has reversed the 8, 17, 50, and 200, clearly in a daily and weekly bongo showing dollar weakness, which may be good for multinationals and should be good for metals. If I look at the VIX, the bull case is that we've broken below the 200, which has been significant resistance to the VIX in the past. The bear case is once we get to this point, this is where the VIX usually reverses, and when the VIX, if and when the VIX decides to reverse, is when we will see some challenges for the bulls in the marketplace. Since the dollar was weak, you could suspect that gold and silver were strong. Here's gold failing at the 200, but having a very big move up for the week. I kept saying I'll believe this when it gets above the 200 and stays there. And you could see we failed multiple times at the 200 in this profound downtrend. However, notice the bongos, which are my buy-sell signals, have gone positive. And if I look at silver, same exact story, struggling at the 200, positive on the bongos. So my assessment of the market is we're probably have moved very fast, and perhaps we'll have some weakness at the beginning of the week, although futures right now are relatively flat. And breaking out of this box will lead us to new highs. The question is whether that happens now or in February, but hopefully the 50 will hold support and will start to turn up and lead this market higher. Sorry about that. That was my Kindle waking me up, but I was on a red eye, so that wasn't necessary. Jumping into TradeStation, where I don't like seeing that. So hopefully TradeStation will open up in a second. Okay. Don't know what got killed in that upload, but let's just take a look at my elder signals here. Very quickly, the NASDAQ in a buy signal with a green paint bar and a person buy, and a buy signal on weekly and a blue on monthly. So what we've seen here over the last couple of weeks is some strength in the market, and ultimately saw a move on the weekly and the monthly chart starting to turn more bullish. But across the board, the monthlies are still in person sell signals. Many of the weeklies, however, have turned long. The Dow, which has been a leader, big stocks, you could see buy signal, buy on the weekly, and now a green paint bar, so an elder buy on the monthly. The S&P 500 is in a weekly buy, daily buy, and green on the monthly. So the large stocks certainly looking better than some of the small stocks. And then the Russell futures gave back a little bit at the end last week and are in a sell signal with a blue bar, but weekly they're in a buy, monthly in a sell. So the Russell a little bit more confusing. I'm not going to go through the sectors. They're pretty much, I'll go through very quickly. We'll just look materials in a daily and weekly buy, as strong as anything right now. Energy slowed down a little bit, went into a person sell signal on the daily, but still in a buy on the weekly. Financials actually went to a buy on Thursday or Wednesday. Excuse me, on Thursday had a big update, turning green for elder. Friday a person buy signal. They're also on a buy on the weekly. Industrials in a sell daily, but still weekly buy. The fact that you have weekly buys and daily sells suggests that perhaps the market has turned up and you're retracing some of your gain or pulling back. Technology, as strong as it goes right now. Daily and weekly buy, green bar on the monthly. Consumer staples also turned down a little bit midweek, but still in a weekly buy and a green bar on the monthly. Utilities, been very strong, both defensive and with the lower interest rates, and strong with buys in each 3 time frame. Healthcare, after some sell-off, actually went to a buy on Thursday, is still in a weekly buy and has a blue bar on the monthly. And consumer discretionary, daily buy, weekly buy, getting better but still in a person sell signal on the monthly. Take a look at industry groups. See, we have 173 groups to start. We look at the 2-day force, and we see that 71 of them are to the upside, and we have 15 to the downside. There's a lot of energy to the downside, and even though there are some airlines like Hawaiian Airlines that was quite strong, you could see that overall the airlines, oil services being led down by Schlumberger, base metals, miners, Trains, casinos, steel were the weaker groups to the upside. And really leading this group of late is the internet media. Take a look at a couple of those. Start with Twitter. As you know, Twitter made Dorsey their full-time CEO. The stock's been on a nice move ever since. Let's get into my stock reading view. And you can see everything's green up here. My technicals had a mobile breakout, broke above the 50, heading, here's the group strength, which is strong, heading up towards the 200. My target's about 38 on Twitter. Also had a pocket pivot on Friday. Facebook leading this market, sort of a high base up here, trying to break out. It's getting close to new highs. I think it goes past 100 this time. Did have some pocket pivots last week. OBV is strong. Everything is green up top. Google, this is a strong period of year for Google. And in many ways, Google's chart reminds me a lot of Amazon, which I think is the next chart. Nope. Where'd Amazon go? Oh, I guess Amazon's in a different group. But big move up, sideways, consolidation, waiting for earnings. And this is a seasonal, very strong time of the year for Google, now called Alphabet. And Baidu, we talked about over the weekend. It's certainly been in the penalty box. It looks like it's bottomed here and wants to turn up to break above the 50 like the moving averages. Had a mobile breakout. Still a little bit of red up top, so not as clear-cut of a choice. So internet media continues to have some strength. Here's been a big mover, Weibo, breaking above the 200. This is what we hope to see the markets do. Lots of green, a Bible gap up on Friday. Let's just open up the earnings on this one. Does not make any money. It's a Chinese internet stock. Buy at your own risk. Not for me. Second group on the list will be specialty pharma. So a lot of these have been beaten up of late. I'll highlight a couple of the ones that I follow. Valiant has earnings today, coming off a major pullback. In fact, let's see how major of a pullback that has come from. From its high here, before the biotech pricing scandal, dropped 42%. Jeez. It's moved up from there considerably. It's 17% off the bottom, so congratulations if you came in on the bottom. Today's earnings day, it will be interesting to see where it ends up. It looks like it's done going down. If earnings are decent, I'd look for a trade back up here to the 200 to the 210 range, but we've got to see earnings before I'd say anything. Radius, a lot of discussion about them being acquired by Shire. Pull back to the 200, which held, broke above the 50, a very bullish looking chart to me. Kahunas and pocket pivots last week. I have a position in Radius Health. Other ones that we've followed over the years. Jazz, another one of these biotechs that's gone through a hammering. Dropping from 200 down to about 120. I'm concerned about pricing in the marketplace. Earnings per share slowed down, was a great short opportunity back here, and I think we talked about it as it broke through the 200. Don't like its earnings per share growth. Just compare this minus to Valiant. Again, we'll see what its earnings look like today. But Valiant has some great earnings per share growth, although they've been very much mired in this concern about drug pricing. And then Horizon, one that I've been owner of, kind of looks like Valiant with a pullback, sideways move, trying to break above the 17, has great earnings per share growth coming in compared to PE, but it too is mired in the price gouging discussions. Biotech, back up here. Interesting how healthcare has changed. Prime Healthcare, Five Prime did a deal with Bristol Myers this week, which is why they are up, and they're already running. It's tough to buy a stock that's doubled. PT Therapeutics looks interesting, breaking above the 50 on a Kahuna and a mobile breakout from a squeeze. It was on some scientific data, certainly not on any sales. It's a preclinical company. Gilead, you notice all of these stocks have had deep pullbacks. At some point, they're going to be good buys. Gilead has great earnings per share growth, but it's going to struggle, I believe, to get above its 50 and its 200-day moving average. Biogen, upper left to lower right, hard to believe for this stalwart in orphan drugs, but you could see what's happened with Biogen is its earnings per share growth has disappeared, and so has its stock price. So some of these look like they're setting up. Here, Celgene has to get above the 200, but I don't think this group is totally out of pain yet. I don't think the pressure on pricing in pharma is gone. It'll be interesting to see. Large pharma, now these are different than biotech in that they trade at smaller multiples. They often have dividends, and they were less punished with the pricing scheme, but they were punished too, as this one's below the 200-day moving average, which has been resistance and might be resistance again. But J&J pays a 3% dividend, some growth coming in 2 quarters. Pfizer, negative earnings per share growth, 3.3% dividend, did break above the 200-day moving average. Much more constructive looking chart. In my opinion, everything's green up here, had a mobile breakout from a squeeze and a kahuna. And then Merck, ways to go before it gets back into the, from my opinion, a viable range, but it too pays a 3.5% dividend. Defensive plays were up this week, and I think that explains some of the move on the drug side. Going back into my 07, I hit the wrong button, and now I'm in the penalty box. Semiconductor devices, we saw technology was strong. SanDisk, rumor of merger. Come on, here we go. Broke above its 200-day moving average. Kahuna's last week, not much in the way of earnings per share growth. Trades at a multiple of 20. From a technical perspective, this is the industry group is strong. It's broken above the 200, which I like to see. OBV is up. It's higher than its relative strength of SanDisk, beats the S&P, but much of this is news driven on potential merger. Intel has done this on its own. Still don't like its earnings per share growth, but with the improvement in the industry and kind of following exactly the industry group, moved up above the 200. Maxim broke out this week, I believe I'm not sure on earnings. The earnings are due this week, so I'm not sure what drove Maxim. I might do more info from Web, check with FinViz, see what they say about Maxim. Potential merger with Analog Devices, so I would skip that. Qualcomm, bounce off the bottom, had a doji there and a high close doji after a bongo, multiple kahunas and pocket pivots. Target would be the 200-day moving average, has got a lot of power in this move, but that's only another 10% from here. Earnings are November 4th. So, after the market's been beat up, I guess it's not a surprise that we're not seeing great chart patterns, but we are seeing stocks that moved off the bottom and are accelerating. Next group is infrastructure software. Hard to believe we're back to markets being led by Microsoft at Intel. Microsoft is above its 8-day exponential, had a mobile breakout, everything is green. Don't like the earnings per share growth. Do like Windows 10, and it certainly looks like it may move up to test that 49 range, but that's been resistance in the past, and that's only $2 away. FireEye, one of the security stocks, has fallen from 55 down to about 30, bounced on Friday after a bongo. That's a one-day wonder for now. There's always talk about acquisition, and then it keeps going down further, does not make any money. Maybe this is a great place to buy. You're getting close to where it's dropped before, but I don't really see anything showing momentum coming in except for 1 or 2 days. Palo Alto Networks is the leader of the group from a stock perspective, sitting right on the 50, had a kahuna on Thursday, getting close to being interesting, right below the PSAR dot. It too does not make money, but I like this chart pattern much more than I like. FireEye, Splunk, looks like a drug stock with a deep pullback, trying to move up here in the lower right hand corner. Don't like the earnings per share growth. So I don't see a lot of charts that I like, despite the fact that the markets are stabilizing. REITs are another defensive play. We'll look at a couple of these. And the story here are dividends. Here's nice lower left, upper right, Equinox. but it's a $300 stock. Great earnings per share growth, paying a multiple of a dividend of 2.4%. I liked HCP. I liked Macerich. Breaking above the 200 here, pays a 3.1% dividend. A number of the healthcare REITs have been bouncing off the bottom. This one pays a 4.8%. HCP, a similar chart pattern, pays a 5.8%. So the REITs are not super strong chart patterns either, but they seem to be basing, some breaking above the 200. But what's attractive on these is their dividend yields. Number 8, diversified banks. So Bank of America, this is interesting because interest rates are still in the penalty box, but I guess there's thoughts that rates may be going up sooner than later, and because of that, we may see improvement in insurers and banks. Struggling to get back above the 200. It trades between 18 and 14.5, and it's in the middle of the range at 16.2. It does have some earnings coming in, pays a 1.2% dividend. Citigroup kind of looks the same, except it failed at the 200 on its first attempt, pays a much smaller dividend, and JP Morgan getting close to that. So banks sideways trying to recover, and I guess after market pullbacks, this is the types of chart patterns that you see as stocks try to work their way back up. Telecom carriers had strength related to dividend plays as well. Here's AT&T. And I feel like a broken record, struggling to get above its 200-day moving average, pays a 5.6% dividend. Earnings actually coming back into the stock, and it pulled back as low as 32.3. You're about $1.50 off the low, and you're capturing a pretty massive dividend. Certainly not a growth stock, but maybe a place to be to park some of your money to pay for a dividend. Verizon, 5.1%, similar chart pattern, has a ways to go to get back to the 200-day moving average. And then packaged food, see anything here. I have a position in Cal-Maine, so we'll go through the first three. Mondelez, a recent spinoff, one of the best chart patterns we've seen. Pullback base breaking out again, all green here with a mobile breakout, pocket pivots. Not great earnings per share growth, pays a 1.5% dividend. Kraft, pull back to the 200 and breaking above the 200 with a mobile breakout and a pocket pivot, 2.8% dividend. And then Cal-Maine Foods breaking out from this recent pullback here, mobile breakout, pocket kahuna, much more earnings per share growth, and a 2% dividend. So these are some of the best charts, and I guess staples are somewhat defensive play as well. Here's the buy list that I looked at from this weekend, just to put it up there so you can see. Take a look at some of them. Amazon's got earnings this week. I think I have a position in it. It's like Google, big gap up, failure, sideways, ready to break out again. One of the strongest looking charts, nice uptrend. Be interesting to see what they have with earnings. Last time they surprised the street who was projecting a loss, and they had a big upside. They'll also look at numbers on Kindle and their Prime. Everything turned green up there, including the weekly bongo. REI was a choice a few weeks ago, which continues at a nice uptrend, but it's a tobacco stock, 3% dividend, and a defensive play. Don't know anything about Bright Horizons Family Solutions. It doesn't play a lot of volume, so I didn't pick it as my stock of the week. But what a tight lower left, upper right. Pull back to the 50. Mobile breakup from a squeeze, pocket pivot. And kahuna, this almost was my buy of the week. There's not enough volume, and if I chose it and anybody besides me bought it, we'd use up the entire daily volume. But this one has a PSR breakout as well. Looks interesting, but again, too thinly traded to be a buy of the week stock. So let's go take a look. Then Asbury Automotive Group. This is the buy of the week stock. Truth be told, I bought this stock on Thursday put the order in Thursday night, bought it on Friday. This is one of the auto retail roll-up companies. And you can notice that it's all green up here, coming out of a mobile breakout from a squeeze. Broke out on Thursday from a confluence of moving averages, took out a descending trend line, had multiple pocket pivots and a kahuna. Let's take a look at it in TradeStation. Okay, so as you can see in TradeStation, it's in a PPS buy that came in Thursday. It's in a PPS weekly buy. Look at the OBV volume strength, whether you look at monthly, weekly, or daily. I put, open up the, I'll go into the PowerPoint in a second. Here's my buy today. If it takes out my buy stop, my target, and my stop limit, or stop order rather, sell stop. Let's go back here and let's look at chart of the week. Again, these are educational purposes only. Trading involves risks. This is for demonstration and not for trading advice. Start as we talked about. Here's my trade. Highlighting the mobile breakout from the squeeze, everything being green, breaking out here, pocket pivots, kahunas, OBV strong, and relative strength are strong. So my consideration says buy it at 87.10. My target one is $93. My stop at 81.13. I'm risking about $6 per trade, or about 6.85%, and purchased 335 shares. The only reason I didn't like this trade, to be honest, is it was a better trade on Thursday than it is today, so it's already started its move. I still think this goes much higher. It's pulled back from close to 100. Last, if you like this stuff, I have started a user group called the HGSI PUG user group. It's basically a closed group dedicated to integrating HGSI with real-time trading system developed by John Person. Anybody that owns HGSI and is a lifetime owner in John's Indicators is invited. There's no cost to participate, and our goal is to improve trading results by integrating the tools of HGSI at end of day and intraday with real-time charting and signals on the intraday chart. Contact me by email for more information, and hope to see you at an upcoming meeting. And my email address, hgsidoc@gmail.com. Good night, everybody.